मेरे को अगर बोलना है कि जूम जा तो बोल सकते ना।
हेलो 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 चेक माइक चेक हेलो हेलो
इसमें तो आवाज नहीं आ रही। करो।
चेक माइक चेक हेलो
इससे अब अच्छे से।
हेलो हेलो चेक
ये नॉइस थोड़ा कम हो सकता है क्या? बहुत नॉइजी है।
एम्बियंट साउंड कम करो, कम करना पड़ेगा
हाँ करो ना, बहुत नॉइजी है।
नॉइस।
Hello, check. Hello. Hello, check one. Testing, check 1 2. Hello, mic check one. Testing.
Only in Bombay. Only in Bombay. Some, yes, some registered. અમારું જૈન સંઘ સંગઠન ચાલે છે એના એ નોટેડ મેમ્બર્સ રજિસ્ટર્ડ મેમ્બર્સ એટલે હું એની મિટિંગની અરેન્જમેન્ટ કરતો હતો આપણે આ જરા અર્લી હતી તો એની સાથે ઘરે તો હું તમને આખું બોલાવી દઉં એની સાથે હા હા
Requesting all those having tea to please take their seats. You can carry your tea to your chair. We would like to start. Requesting all those having tea to please.
Ladies and gentlemen, I, on behalf of the Association for the Protection of Public Trusts and Charities, welcome you all today to this very important meeting which we are gathering for. This meeting is to create awareness regarding the amendment which is being forced on us in the new finance bill. We are charities and public trusts, and most of our charity is honorary. The compliances which are said to be taken care of now are so stringent that it will break the enthusiasm of the trusts. To give details on this, today we have very distinguished speakers on this. First is Mr. Andiarujina. Mr. Firoz Andiarujina is a senior Supreme Court advocate with a 50 years practice, especially on constitutional matters and taxation matters. And he will make us understand what are the implications if these amendments are gone through. Then we have Mr. Viren Merchant. He is a senior veteran chartered accountant. Specially, he has been associated with many trusts, Anjuman-e-Islam, the Bhatia Trust, the Bora Trust, and he has been an advisor to government and semi-government bodies on how to run the charities. And lastly, we have Mr. Naushir Dadrawala. Everyone knows him. He is not an expert. He is a creator of experts. I think with this type of distinguished list of speakers, I should stop here and let them move on. Mr. Andiarujina. Thank you.
Distinguished speakers, friends, today's public meeting is, according to me, extremely important since it covers some important facets which affect charitable and religious trust. The Finance Bill 2023, as introduced by the Finance Parliament in the budget speech, looks reasonably simple and clean forward document. But coming to the taxation in the Finance Bill, there are totally 120 tinkerings, which includes 105 amendments. In these amendments, 8 amendments concerns charity, and let me deal with just 2 important amendments which are required to be really taken forward because it will affect the very purpose of charity and will affect lot of genuine charitable institutions and giving of charity. The first important issue and the amendment is that if one trust gives a donation to another trust, the donation is out of income, then normally it would be allowed. But now there is an amendment that if one trust gives a donation to another trust, only 85% of the amount would be qualified as application of income. In other words, to put it very simply, if a trust gives a donation of 100, it has actually given 100. The application would be limited only to 85%. Now, let me come straight away to what is the intention and the implication of introducing this amendment. To find out this particular issue of intention and implication, the idea can be gathered from the memorandum explaining the provisions of the finance bill. In the heading, rationalization of provisions concerning charitable and religious institutions and trust, in para 3.2, it is very clearly specified that it has come to the notice and instance that there are certain charitable institutions and trusts who are trying to avoid the intention of the legislature by creating multiple trusts and thereby allowing accumulation in multiple layers. This is the first sentence. The second point, that thereafter it is pointed out that by doing so, the multiple trust having the benefit of multiple accumulation in various stages. The word uses stages. Therefore, in the ultimate analysis, what is pointed out is that the ultimate benefit which goes to the charity is less than 85%. Now, I'm just analyzing this intention of the legislature to bring the amendment. Point number one. The intention of the legislature is that a trust creates multiple trusts. This is point number one. This is what is mentioned in the memorandum. So a trust creates multiple trusts, and number two, the other trust in turn gives donations, therefore creating multiple layers, so that that 15% accumulation issue is spread over and made layers. Thereafter, it is further specified that if by doing so, at this stage, multiple layers and stages are formed, then the accumulation of 15%, 85% is defeated. First point, please take into consideration. It says where a trust creates multiple trusts. So the first condition according to me is there must be creation of multiple trusts by that NGO. Point number two, in turn, the other trust to whom it is given should also give such donations to other trusts, in turn the other trust. So there are layers after layers and stages after stages. I'm making this point very, very clear. On a clear reading and intention gathered from the memorandum explaining the provision, if there is an NGO, if there is a charitable institution or a trust which has not created multiple trusts, and if it gives a donation, and if the other trust has not in turn given it in multiple layers to other trust, according to me, this amendment would not apply. I am very clear, and I am making this statement from this platform, that this 85% restriction presupposes a precondition, namely that the trust or the NGO has created multiple trust and there are multiple layers. Words are layers, multiple layers, stages at a later stage. If not satisfied, then according to me, the amendment would not apply to the trust. This is the legal interpretation. Let me now come to certain features and characteristics of this. The first feature that comes to my mind is that if there is an NGO and there are various small trusts, say in the villages, remote areas, northeastern areas, tribal, rural, backward areas, which regularly require funds and money from charity. Here is a big organization, a big NGO, and that NGO gives money to that small trust. That money is utilized in the remote areas, backwards, etc. The government can't reach them. It is the NGOs who are performing this great task and giving them this kind of money. The question then that would arise, that organization is not formed by the NGO. Number two, it's arm's length. And further, that small organization or a charitable trust has not in turn given the donation to any others, creating multiple layers. In such a scenario, in my opinion, the provisions would not apply. If on a literal interpretation, if you take it, then it would be disastrous. Because what would happen? NGOs would not give charities to small trusts located in backward rural areas, and charity would suffer to a very large extent. Or take the second instance. Today, you have trusts which are specializing. Say education, say medical. Under section 2, subclause 15, charitable purpose, there are 4 limbs. The 4 limbs are aid to the poor, education, medical, and general public utility. I'm not talking of GPU, the general public utility. I'm concentrating only on medical and education. If there is an educational institution or a medical institution, it specializes in medicine or education. But it thinks that giving an educational institution may think that giving some amount towards medical aid is also charity. Therefore, it gives to an institution which has specialized in medical field. Now, with the advent of this provision, supposing 1 crore is given, then actually only 85%, therefore 85 lakhs would be allowed. Not the full 100, though from the pocket and the coffers of the NGO, it is 1 crore that has gone out. Here is a genuine case of specialization, where a particular trust dealing in medicine or education gives for some other purpose which it wants to give, but it does not have the expertise. it does not have the specialization, but wants to do a charity, would suffer, and this would be a very big blow. Therefore, the provision is not practicable. Take the third instance and the feature. There are small trusts, small religious trusts, small other types of trust, and they require money for day-to-day expenses, their administrative expenses, for example, staff, welfare, rent. For this, they approach big charities, and those institutions give money, though in reality this is for just keeping afloat because they don't have sufficient income from their corpus. Now, if you have to calculate that no, only 85% would be treated as application of income, that would be a big disincentive for the particular trust to give the donation. Now, I have dealt with 3 features and characteristics. Let me now come to some pure legal issues on this. The first legal issue. There is a recent judgment of the Supreme Court in the case of Noble Education Society. Judgment is dated 19th October 2022. The 3-member bench judgment of the Supreme Court in the case of New Noble Education Society's case has come out with one new concept. The heading is solely for education. This was on the case of education. It deals with the issue in paragraph 49 to paragraph 52. What does it say? It says that the words used in the proviso subsequently is that any educational institution must be solely for the purpose of education. So they have analyzed the word solely, given dictionary meanings, etc., and in para 51 made it very clear that henceforth an educational institution has to have solely the objects only of education. They cannot have any other educational objects. This is to be read in conjunction with paragraph 77 and para 78 of the judgment, which amply makes it clear where the Supreme Court says that our Constitution gives a right and equates education with charity. On the word solely, so now you have a situation. Situation is that henceforth, trust will have to formulate, change their objects. This is a very important thing, and therefore in para 78, the last paragraph, the Supreme Court has made it clear that this judgment will not operate retrospectively, but is only prospective. So henceforth, people would have a chance to formulate and make their own objects. So today, usually we had all the objects. Now the issue is you should have solely. If you are education, solely. If you are medical, you should have solely for that particular purpose. Coming to that point which I told you of specialization. I have medical and education. I will now have to select and do what is my main point. Supposing I am education, then I would like to contribute for some medical education or different type of points, or to a hospital, or for the poor. In that circumstances, looking into the present scenario, it would be debarred from doing that because of the word solely. This judgment is of 19th October 2022. This goes directly opposite the provisions which they have framed. They have not considered this interpretation of solely or paragraphs 49 to 52 and paragraphs 77 and 78. Let me point out the second point. See, even under the Maharashtra Public Trust Act, if you look at the rules and the scheme, the courts have accepted scheme where 2% of the gross revenue, gross receipts of a hospital is earmarked for IPF, impaired patient fund. So you have to contribute to the patient fund 2% of your gross receipts technically for all hospitals, etc. That is already gone. Now with the limited funds, supposing a hospital will have to maintain a lot of things, if a big hospital or an NGO gives it to another charity, then you want to tell me that only in application 85% would be considered and not the 100%? It would make no sense in giving the charity. Take the third instance. The third instance is also the recent case of the Supreme Court in the case of Ahmedabad Urban Development Corporation. In this 3-member bench judgment of the Supreme Court, a very important point was laid down for charity. The Supreme Court observed that henceforth charities are only for a charitable purpose. The motive is not to make profits or super profits. The Supreme Court clarifies that charitable trusts can make profits, but it should be reasonable profits. They have come out with the concept of cost plus. You recover your costs plus some reasonable amount. They say, we are not stopping you from charging and making profits, but the profits must be plowed back for the poor. Now, in this scenario of cost plus reasonable profits, hospitals, take for example, schools, take for example, cannot charge exorbitant and higher fees, or they cannot charge very higher fees, which is prohibited according to this judgment. Take the fourth instance. This judgment of Ahmedabad Urban Development was rendered in the context of general public utility under the General Object Clause, not concerning with education or with medical or relief to poor. However, recently, in this year, the Hyderabad Tribunal, in the case of Fernandez Hospital, has applied the ratio of Ahmedabad Urban Development and stated that a hospital cannot make profits, super profits. It must be only cost plus reasonable profits, and did not allow the benefit of Section 11. Now, looking into these 4 points and 4 legal interpretations, which are totally affecting the very root cause of charity. Because if I give 100, you are allowing me only 85, then what is the point, the incentive to give a donation, more particularly to genuine small trust, more particularly when I have not created multiple trust, and more particularly there are no multiple layers or multiple stages. Last point on this issue is accounting treatment. The accounting treatment would be that when I make a donation, in my books of accounts, the entry would be that I would debit my income and expenditure account to the extent of 100, because that is the total outflow which has gone. But in my computation of income, for tax purposes, I can claim only 85%. Question: what happens to the 15%? My opinion, 15% should be allowed as accumulation. Whichever way you look at it, the 15% should be allowed as accumulation. Friends, if this provision is brought, it will create a lot of difficulty, more particularly in the light of the 2 Supreme Court judgments. I can continue a little bit? Just 5 minutes, I want to be very fair to all. Let me go ahead with the other provision. That is concerning repayment of borrowings, loans, and corpus. See, the law as it stood now is that any amount which is made out of the corpus or out of the loans or borrowings taken would not be allowed. This is hit by section 11(1)(d). However, please note that if you replenish it, then when you replenish it by a corpus or by a loan, when you repay back it, then it would be allowed as a deduction. That was a simple point. In 2021, there was an amendment by the Finance Act of 2021, whereby the law was amended to say that this would be allowed only if the amount comes from the modes specified in section 11 into bracket 5, that is the modes of investments which are prescribed for investments in those particular things. Now the amendment has 2 important limbs. I will just touch those 2 important points. The first important point it says is that this amount of loan or borrowings or from the corpus has to be replenished within a period of 5 years. This is the one thing. So the first mantra is repayment in 5 years. What is the second point? The second important point is that the application should have taken place on or before 1/4/2021. So these are the 2 issues on which I will deal with it in 2 minutes. The first point, the period of 5 years. First thing, it goes on the presumption and assumption that I have already applied it. This is not the correct presumption in law. Second point, it says I have to pay it back within a period of 5 years. Look at one practical difficulty. Loan is taken in the year prior to this 17-18 financial year. It has to be repaid within period of 5 years, 23-24. How can the trust repay it? It would be totally wrong, impractical, and unethical to say that you repay it financial year 17-18, 5 years expires on 23-24. It is the benchmark which is given prior to 1/4/21. It's not possible. Secondly, these corpus and borrowings and payments which are given are normally on capital account. They are normally utilized for creating a capital asset, say for building a school, building a hospital, building some fixed asset. That may take a number of years. So how can you expect that income is generated and repayment is made? It would not be possible. It would not be practical. The 5-year period is totally not correct, impractical, and unjustified. Let me come to the second point. The second point is on this date, cut-off date like. They have said before 1/4/21. Now, what is the sanctity of 1/4/21? There is no sanctity on 1/4/21. Those which are taken prior to that, those would be considered. Now, this would mean, according to me, two things. The provisions, according to me, per force, are unconstitutional and invalid. It creates unreasonable discrimination between people who have given the loans and the question of making repayment within a period of 5 years. The unreasonability is, I gave you the illustration of those of 17-18 who have to repay it back by 23-24 has no meaning at all. Moreover, if a fixed asset, capital asset on capital account is done, then it would be impossible because the construction itself may take more than 5 years. Where is the question of generating the income? And if you take 1/4/21, synchronizing with the Finance Act of 21, where I told you that amendment was brought in the first on the question of investments, still it has no meaning. According to me, this could be challenged and regarded as unconstitutional. Finally, my only points is, in paragraph 77 of the judgment, in New Noble case, the Supreme Court says that our Constitution equates education as charity. When you treat education as charity, and when in a number of ways you are thinking and appropriating medical help to the poor, needy, you have to spend, because the criteria is you need quality. You can't hinder an organization on merits, on specialization. And ultimately, by doing charity, that is the biggest goal a person can do in his life. But by a fiction, it's not by fiction mentioned, but I'm saying by a fiction and a notion, you say, oh, you have given charity? Restrict yourself if you give charity to only 85%. According to me, these provisions would be very, very harsh. It would go to the very root of charity and create a lot of problems. Thank you.
Good evening, friends. Respected Mr. Andyaru Jina, my dear friend Noshir, Girish Bhai, Mufaddal Bhai, and all the eminent people present and the people of the press, good evening to all of you. Friends, the only thing which I read from Mr. Andyaru Jina's speech was unreasonable, unconstitutional, and unethical. This is the gist of what he has said and conveyed to all of us. Friends, I will very quickly sum up in my own way and avoiding the repetition to what Mr. Andyaru Jina has just mentioned. See, we go to the basis. The basis of all law is our Constitution. And all laws emanate from the Constitution, whether it is freedom of speech, freedom of liberty. Article 26 gives a fundamental right to every citizen of this country to establish and maintain institutions for religious and charitable purposes. If I am conducting charity or if I am conducting some religious activity, it is my fundamental right. I am not in a state of fascism or communism which does not accept God or which does not accept charity. Now, simply flowing from that, friends, the amendments which they have brought in this finance bill. Now, if you look, see, we go to the department, we interact on a regular basis with these people. We file the returns of charities, and all of my chartered accountant friends and auditors who are into charity and who are into filing of charitable trust and religious trust returns, they will all accept that for last 8 to 9 years, they are just making things tighter and squeezing this entire sector. We remember when we used to go earlier, there used to be promotees in the department who would be some ITO or the additional deputy commissioner, etc. For last 8 to 9 years, we see IRS officers coming there. So Government of India had focused to do something very seriously about this sector. Now friends, apart from the interactions what we have had and the information which we gather from them, we had made a request to them that please, these are all charitable activities, you should rather support it and make it more litigation free. So for last 4 or 5 years, in the same flow of event, they started amending the form which is to be filled in. Now, earlier, when we used to do the computation, there was a leeway. Now, there is no leeway. You have to just follow the procedures laid. Now, friends, which is a welcome sign, because what I see is that this sector is becoming more and more litigation free, which is a good thing to note. But there are some sections in the CBDT or in the Ministry of Finance which is wanting to now go step ahead and squeeze this entire sector more. The first thing which they have done in this bill is to restrict donations to 85% of the total charity given to other trusts. Now friends, a very simple example I give you. I am a trustee of a trust which has an income of say 5 crore rupees annually, and it is not coming from other trusts. The donations are there from individuals, the income is from rent or maybe interest. And regularly every month we give to other trusts for various purposes, including education, including medical, and including protection of animals and cows. Now, friends, if this provision comes in, my expenditure is restricted to 85%. So, supposing I spent out of that 5 crore, 3 crore for such purposes, they will say your application is only 2 crore 55 lakh. Now, this will also, if I want to take it, you go to the computation level, out of say 5 crore, they will allow me 15%, 75% accumulation, and they will say you spent 4 crore 25 lakhs. Now, when we come to this sheet, I have already spent 3 crores from my fund to be given to other charities. I should have technically spent only 1 crore and 25 lakh so as to claim total exemption in the normal circumstances. 1 crore 25 lakh, 3 crore equals to 4 crore 25 lakh, 5 crore is my gross income, 15% is my accumulation, 75 lakh is exempt, matter ends. Now, a very serious anomaly will come that out of 3 crore what I have spent, 45 lakh is not allowed. So now, if I want to remain in a tax-free status, I will have to spend 45 lakh more for other charitable purposes. In short, my physical accumulation will be then qualifying for exemption. Otherwise, I need to pay tax. My money, which is there, 3 crore, 1 crore 25 lakh, plus 45 lakh physically I will have to spend from my pocket, and in short, what I will get is a very lesser amount of accumulation. Now, earlier, as you all know, it was 25%, the same accumulation was brought down to 15%. Now, who is hit by this provision? As Mr. Andhyarajina rightly pointed out, the memorandum says that it is to curb the multiple layers of trust donating to one another and eventually saving at each stage 15%. But here is a case, I receive no donation from other trust. So I am not actually, I am the first instance where the money is being given. Then why should I suffer? So there we have made a suggestion, our Chartered Accountant group has come up with one small amendment which we are going to propose to the Finance Ministry, that 85% be restricted to lower of amount received from other trust or donated to other trust. So if I have received only, say, 10 lakh out of the 5 crore, and that amount is spent, I have spent, say, 50 lakh for giving charity to the other trust, the amount restricted is only 10 lakh rupees, which I have received from other trust, because this is what they want to curb. But then why should other trusts who are not taking donations from other trusts suffer? So the whole idea is there are n number of religious trusts, n number of charitable trusts who are generating income out of their own savings or out of their own efforts, rather than depending on other charities. But those smaller charities which are dependent, say some Panjra board is there or something is there, they are all going to suffer. And today, sir, we have made an in-principle decision that we always used to give donation. If we had a medical application, we used to give it to the trust rather than giving it to the applicant. If we had an application for education relief, we used to give it to the education institutions rather than giving money in the hands of the beneficiary. Same is the case with Panjra board, that we used to give donations to Panjra board by way of check in the name of the trust. Now what will happen is, we will have to change this entire modality, and just to save ourselves from not giving to trust, we'll start or be forced to give it to individual recipient. But this is again part of the tax planning which chartered accountants will help you out. But this is per se wrong and it is unethical, as what rightly pointed out by Mr. Andhyarujina. Now, sir, let's go to another major modification, which is repayment of loan and corpus recoupment. Now, as what our learned speaker said, they have presumed that prior to 1/4/2021, see, they don't have any records. They never had records of your 12A registration. The whole idea of re-registration process was done basically so that they get a ready, soft copy of what your trust is, be it your trust deed or whatever your names of trustees, PAN number, etc. They never had a compiled record. The same is the case with this expenditure which have been incurred out of corpus. Earlier, they were not harsh on that. Corpus amount could be spent, if the trust deed allows, either on revenue or on capital expenses. And when earlier people used to claim it, they would also claim it as an application under section 11(1). So there they had supposing 100 crore rupees as corpus donations, and they have spent 80 crore rupees for construction of a school. They will say 80 crore is applied, and they used to claim losses. They said, no, there cannot be a loss. All right. So they made a provision in the form which says that, okay, if you have spent out of corpus, you claim that 80 crore is spent from the corpus, and when in a future time, when you earn, you recoup, and again bring your trust corpus to 100 crores. That was the idea. The same was the idea with loan, that okay, you have borrowed 100 crores, you have constructed school worth 100 crores. Obviously, you are not going to generate income in the first, second, fourth, fifth year, but you are going to generate it later, and you are going to repay this loan to your lenders. So at that time when you repay, you claim. This is again, the anomaly started with circular number 100 of CBDT. There were some few trusts from Bombay who approached in 1970s the finance ministry that look, we have regular dividend interest and other income, and there are students coming to us for loans. So these loans are repayable by them in whatever period of 5-10 years. So you allow us to claim this as application. So deviating from the accounting principle, in 1973, they issued a circular number 100 stating that, okay, when you apply, when you give loan, claim it as application. When you recover the money, you claim it as income. Now what they messed up was with the basic accounting principles. Accounting principles say that when you give a loan, it is a capital outlay, it's to be reflected in your balance sheet. And when you repay, it is not your income, but your capital receipt. Now, so many judgments were there to that effect that even Supreme Court said, no, repayment of loan cannot be your income. So eventually what was happening is there were multiple claims by the borrowing entities and the entity which was giving the loans to such trust. So they removed that, the provision which was made purely for educational assistance to people going abroad and repaying the loan. They painted the entire thing, the entire concept to all loans given. Now, it would have been wiser had they consulted the Institute of Chartered Accountants of India, but you know, CBDT finance ministry is too high to consult an ordinary institute like Chartered Accountant. So they made laws. Now what they say, okay, you give loan to another trust, you claim it. I am talking about prior to 1/4/2021. You can claim it as application. And when you receive, you treat it as income. And there were so many conflicting judgments that eventually they came up with this provision that no. You spend anything from the loan, not to be allowed as application, but they made a specific space in the new schema, the new form which they made, that okay, if you have spent from the loan, you do not qualify this expenditure as application of income, but when you repay, it qualifies as application. Now, they have on a general presumption. Now, I know personally so many trusts who have retained the concept of accounting and they never treated loans given as application. I personally know. And the trust which has received the loans has also not claimed it as application. It has treated it as just received a liability. Now, the Finance Ministry has presumed that all loans which are given prior to 1/4/2021, people have claimed application. Just because they do not have a tabulated information about each trust, they are presuming. Now, this is very childish of them to do that. They could have trusted the auditors to certify, looking at the past return, what is the actual amount which has been claimed as application from those loans. And now the law which they have made, or what they have proposed, is they say everything is presumed and therefore no application to be allowed at the time when you repay the loan. Now the anomaly which our friend and learned speaker just told, that what happens when somebody has borrowed loans from a bank. 100 crore is borrowed in 2017-18. And as per the normal banking, commercial banking laws, the loans are normally repaid over a period of 15 years, 20 years, which is the case with all loans. You take a home loan or whatever, they allow a very long period, long gestation of repayment. In fact, this same finance bill has extended the scheme of the central government, wherein, the state governments have been granted loans, interest-free loans for infrastructural projects for 50 years. There was a big announcement. People would have read it. They have extended that. So you accept that for infrastructure, central government can give a loan for a tenure of 50 years, but a charitable trust, no. Delete the zero, make it 5 years. What nonsense is this? How can somebody repay? How can somebody generate that much money? And just see, when after 5 years has crossed, your trust has started generating income, say on the 7th or the 8th year, and here you have a liability of making the payment to the lender bank or the lender trust. You are generating income, the application is not allowed, so it results in what? A huge amount of taxable income, 30% flat, because you are not allowed to now claim that repayment of loan as application. The same happened with corpus donations. When corpus donations were granted, this was one of the arguments which I had made before the commissioner, who was very much doing all this paperwork of framing schema. I said 100 crores, supposing an exigency, and this was prior to Corona, maybe a year or two prior. I said some exigency comes, some earthquake comes in the month of January or February, and the trust has 100 crores in the bank. An amount is required to be applied for the beneficiaries of those earthquake or such natural calamity. So, if there is 100 crore, what the trust would not spend anything? You mean to say only the interest income what I receive from that 100 crores is to be applied? I said it will be a shame on me if I am a trustee, if I don't apply that money out of my corpus for rescuing the people. So I will spend 50 crores, whether you say yes or not, because charity commissioner does not say me no. I will spend. What will happen is, I will go to the public in the next financial year. कि भाई दो पैसा दो थोड़ा. In 1 year I am not going to recover. It will take 2, 3 years, 4 years time for people to contribute. So the income which I am generating, I will definitely go and credit my corpus, otherwise my corpus will get depleted. So the funny argument he told me, you should ask for corpus donations only. I said, sir, this is a voluntary contribution. I cannot ask people, okay, you please fill up this form and say that it is a corpus donation. In the subsequent when I go and approach public, I am going to say, give me money, chanda do bhai, maine earthquake ke liye paisa kharch diya. And people will give with open hearts. But that money, what is coming in, is to be required to go and replenish my corpus. Unfortunately, this amendment what they brought, that no, you may spend. We will even tabulate and keep it separate. But if you have spent prior to 1/4/21, we presume that you would have claimed it as application, which is not the case in all the trust. And therefore, we will now, if you are generating some income, if you have spent 80 crores out of that 100 crores, now you are generating income in the year 2023, 24, 25, because you have spent it prior to 1/4/21, forget it. We are presuming this is all gone and you would have claimed it as application, which is wrong, unethical. Now, what happens to subsequent years? In subsequent years, they say it is restricted only to 5 years. 5 years is nothing. If there's a trust, say, and you have, say, 100 crores as corpus, and you have decided that you will construct a building, and you have spent 80 crore for constructing dharamshala or a education institute or a medical institute. Now you have, rather than borrowing from outside, you have used your own funds, which is not a crime. And your funds need to be recouped, which amendment I really admire that they heard us and they have made this amendment. But do you foresee that in 5 years I'll be able to recover 80 crore rupees? It may take 10 years, 15 years. And if I am not able to claim this as application, as recoupment, I will have to pay tax in the 6th year, because in 6th year I am getting income, 7th year I am getting income, but you say your recoupment is not allowed. But I need to recoup because I have already got weakened by spending money on my capital expenditure. So they say, no, after 5 years, forget it. Now this is hopelessness. This is to kill the charitable sector. These provisions, if these two provisions are brought, they have also brought one another provision of, cutting down that time of filing that form number 9 and all, 2 months in advance, which is also very funny, which I don't want to discuss here because chartered accountants know how more pressurized they will be when they have to file these forms and they have to keep these accounts ready now 2 months prior in advance. Although the date is October, they will have to be ready with everything by August end so that they can file. But anyway, these two provisions of 85% and the provision of loan and corpus recoupment is something which should be repealed, and all the trusts, whosoever is connected with all these charities, they have to stand together, whether we are whatever, irrespective of caste, creed, religion, we have all should stand together and object and put our presentation before the finance ministry. And I am sure and hopeful that the ministry and the people over there in power, some wiser counsels will prevail and the relief will be given in some sort to us, whereby these harsh provisions are either nullified, repealed, or made more practical. Thank you.
My learned friend Firoz Andiarujina, Vipin Bhai, Mufadal Bhai, Girish Bhai, and my friends in the audience. I speak on behalf of perhaps one of the most over-regulated sectors in India. We have the government sector, we have the corporate sector, and we have what is called the voluntary sector. As one who has been with the voluntary sector now for 40 years, I have seen the transition. There was a time when I had entered this sector as a young man in my mid-20s, and there was a sort of a love-hate relationship between government and the voluntary sector. I'm afraid the more I look at it now, it seems more hate-hate relationship. The government seems to hate the voluntary sector for all kinds of reasons, because perhaps some of them are activists, some of them challenge things, but they completely forget that the large chunk is welfare-oriented organizations. Some of the best schools that you might see in this city and the country are established by charitable institutions. Some of the best hospitals that you might see today in this city itself, established by charitable institutions. Whether you look at the National Center for the Performing Arts, established by a charitable trust. Whether you look at a Tata Memorial Hospital, established by a charitable trust. This is a sector that has given to this country some of the finest institutions, and yet we are the most over-regulated. At the state level, there is the Charity Commissioner, a department that works like it's supposed to be a quasi-judicial authority, but behaves like a district court. For everything you need an affidavit. Personally, the trustee must be in attendance. Don't want to get into all that. Second level, for tax exemption and tax deduction, we need to go to income tax. You receive foreign contributions, you need registration under FCRA, the foreign You do any kind of service which is beyond 20 lakhs or sell goods made by your beneficiaries over 40 lakhs, GST will apply. You can say, I'm a charity, I'm exempt from. There's a whole bunch of other laws also. I feel, and I genuinely say this, it's easier to do business in this country, but not charity. I've come to that conclusion. It has made it consistently more and more difficult. First thing is, let's understand what is tax exemption and tax deduction. Tax exempt is because you exist for charitable purpose, you are exempt from paying tax. You don't have to pay tax. When you and I earn a certain income as individuals, we'll be taxed at salaries, taxed at whatever it may be, or business, corporate. But as a charity, you're tax exempt. And then there is a tax deduction, which is an incentive for the donor, which is your famous ATG. Why does government give you tax exemption and tax deduction? Because you are actually doing what government should be doing. Why is this sector called NGOs, non-governmental organization? Because you are essentially doing government work without being government. Therefore, you are a non-governmental organization. Actually doing what government is supposed to do: education, livelihood, skills, healthcare, environment. We are supplementing the work of the government. We are friends of the government. And yet the government consistently and persistently sees this sector as not a friend to the government. It is a shame. I don't know why it is so. So, there is all these stories. In fact, affidavits are filed before the Supreme Court that there are 3.3 million NGOs in country, literally one NGO for every 400 Indians. Utter rubbish. These are statistics from 1860, counting the births of the organization, not counting deaths of these organizations. If you will look at, because we went through a revalidation process for 12A in ATG, income tax informs us that there are barely 224,000 tax exempt and tax deductible organizations in this country. Where's 3.3 million? FCRA, you think lots of organizations receive it? Less than 20,000 receive foreign contributions, out of which 10,000 are still awaiting renewal. This is the sad reality. And this is what is consistently fed into the system. The narrative is of hate, and which needs to change. I'm not saying anything against the government. I want to reason with the government. I want government to know that we are friends of the government, we are not enemies of the government. We are supplementing their work. By all means, regulate the sector, but heaven's sake, do not control the sector. The Constitution of India allows the government to regulate charities, not to control it. What you do with corpus, when you fill it up, what you do with loans, 5 years, if this is not control, what is? Regulate the sector, yes, by all means. So what I've seen is a systematic assault on the sector. And it's been over the years. So let's not blame any one government about it. Way back in 2008, the law was changed when Mr. Chidambaram was the finance minister, that if you have business income of more than 10 lakhs, you will lose your tax exemption if you fall under general public utility clause. So don't blame. No particular regime is to blame. From 2008, I have seen these assaults, but the worst assaults happened in the most challenging year of the world, 2020, where 3 laws for the charities changed back to back. First, under the finance bill of 2020, revalidation of NGOs. Of course, there were extensions given because of COVID, etc. But by 2021, most of us finished through that process. Now we have our 12A ATG only for 5 years. First year though, we went through what is called a straight-through process based on documents given. Wait for your 5 years to get over, and then you will know what this legislation. Just now we say, oh, I got my revalidation for 5 years. 6 months before 5 years get over, apply, and then let's see how easy it is for 2,24,000. Second assault, FCRA was changed. Same thing which we are seeing just now, sub-granting taken away. Earlier on, if you had an FCRA registration, you received foreign contribution, but you could pass it on to another organization, provided that organization also had FCRA registration and it went into its FCRA account. This was stopped. And now when you file your FC4, which is the return under FCRA, you have to state whether you spent it on your own or you gave it to someone. If you gave it to someone, there are penalties. Penalties including your FCRA could be taken away. Something similar is happening in the Income Tax Act. Corpus, we saw the first assault last year, as Firoz rightly saw or told us, that if you receive corpus, it has to be invested in any norm as per 11.5 of income tax, bank fixed deposits, trust deposit schemes, etc. And it must be tagged to the donor. I give you 1 lakh rupees as corpus, then you have to show that my 1 lakh got invested. But there was no bar on if I use the corpus, what happens. Now what has happened is if I use the corpus, I have to ensure that I replenish it within 5 years. Ditto for taking loans. Enough has been elaborated on that. Another important aspect which we are not fighting on, we are taking only 2 points which both my speakers talked about. But under the current finance bill, even if there is a single day's delay in filing your return, your 12A can go away. In that year, you will become taxable. Taxable on your total income because your 12A stands suspended, or is it going to be taken away? That is not even clear right now. So, I repeat, ease of doing business is the mantra going on in the business circle. Is there ease of doing charity? The answer, my friend, is blowing in the wind, as the song says. So, picking up from where my learned colleague Firoz Andhyarujana said, that intent of legislature, which you see in the memorandum, that only if a trust has created trusts and gives it to those trusts, then these proposed amendments should apply. When the ITO, the income tax officer, or the CIT looks at your returns, the question is, what will ITR 7 look like once this becomes an act? it is likely to say what they are doing in FC4 and FCRA. Has the donation been utilized directly by the charity or is it sub-granted? It's as simple as putting that in ITR 7. Have you used it yourself or given it to another charity? Who's to say whether it was created by this charity or it's already a charity that is 100 years old? The important thing is perhaps one simple solution could be whenever you have an act, you can have explanations below it. Simple thing is we can request the government that put an explanation that this amendment will apply only in the case if this trust has made a donation to a trust created by itself, maybe in the last few years or whatever it may be. Then perhaps there are solutions to all this, but the important thing is we need to stand united on this. What is the purpose of today's meeting? A, to create awareness. That awareness has been created. I'm thrilled to see the turnout. This hall is full here and the hall is full here. There is just barely narrow passage to walk. It shows you are all concerned. The next step is a memorandum to the finance minister, and we want your wholehearted support on that. We will also be making a white paper on this to the government, where we want to reason. We are not confronting the government. We want the government to know that we are friends of the government of India. We are not confrontational. We supplement the work of the government of India. Help us. Your legislation, every year when the budget comes out, trust me, on 1st February, my heart starts palpitating. What next? Every year you will see that there is nothing that happens under the Finance Act which is something which puts a smile on your face. For charities, it may be good. I mean, the budget this year is good in many other ways, as Firoz rightly said. There are good things to it. We congratulate the government for that. But where charities are concerned, I have seen a systematic assault on charities. This needs to be stopped. Government needs to understand and realize we are not enemies of the government. We are the friends of the government. We supplement government work, and any changes that you make should enable charity rather than disenable charity. We will throw the floor open for questions and comments at this point. Thank you very much. Would anyone like to say anything? Yes, questions or comments, whatever. Can someone pass the mic around, or shall we? Just one moment. Somebody will be coming around with the mic. Oh, idhar dijiye bhai.
Hello, I am Dharmesh Javeri here from Vileparle, a religious trust. First of all, thanks to your association for really organizing a fantastic meeting today and giving a very nice insight, and especially Mr. Noshir who had pinpointed out all the things. My question is a bit different from this taxation level, because I know what is happening in religious charitable trust. Sir, first of all, the trustees, they are not aware of the laws. This is the biggest hitch. Then they do not follow laws, even after telling them. So can you all guide us, what importance is about Charity Commissioner laws, Public Trust Act, and about that for the trustees to follow, or they can just take it lightly? Because I think so, when we are fighting with the Charity Commissioner on this 2 and 3%, then why are you taking our money? And on the opposite level, we are not following their laws. How they will literally help us? So please throw some light on this.
It's not a subject under
Educational institute, then you cannot spend on medical.
Yeah, I am Narayan Karwa. I am having 3-4 trust. So we give donation for any medical or education directly in the name of the hospital or school. Now the new problem will come where they will require verification. कि किसको दिया, क्या दिया, उसका क्या records है. So that is a real practical problem. How we are going to address that?
Shall I answer?
Yes, go ahead.
normally, see now, this was at older times when there was no Aadhaar, we had this big problem. Because after all, the trustees are responsible to the department that they have spent the money rightly to the beneficiary's account or for the beneficiary. So earlier, we used to give directly to the institute, whether it is medical or whether it is schools, whenever such applications used to come. But with this new provision, you will have to seek your advice from your advisors, your chartered accountants. If I were your chartered accountant, I would say now pay directly to those beneficiaries. But one big thing about that is that these beneficiaries tend to apply to multiple trusts. And there is no way to track that for the same ailment, he is asking money from multiple trusts. How to curb that? The practice which was brought was to curb that, such people who are seeking multiple donations from various charities. So in that context, now it's a different question which has come up. But you may, in that case, if it is hitting hard, you may give it directly to the beneficiary. But with Aadhaar, there is no problem.
Is this our association is registered and how we can become member?
No, we will give you the details. You just jot down, we will send a link for that.
This association is an unregistered body of like-minded professionals and institutions. It's like an AOP, you can say, an unregistered AOP. We have no membership as such. It's a loose conglomerate of people and institutions, which whenever a issue like this, a crisis issue comes, you may remember the last time we had a meeting was around this time in 2020, when the finance bill was amended for this revalidation, etc. I remember, as I said just now, though we have all got our revalidation, 5 years down the line, income tax will want to see genuineness of your activities. Does your trust deed have a winding up clause? Does it have this? Does it have that? Wait for that drama to unfold. Just now you got a little hiatus. So yes, somebody at the back. I see two hands at the back.
Hi, my name is Chitra. I'm handling trust account.
Speak into the mic, please.
My name is Chitra. Just want to ask you, if I want to give donation to hospital, but not by cash or check, suppose I donate equipments, I pay directly to vendors, is it allowed?
In other words, you will buy the equipment from somewhere and give it. I would think that is application of income.
Because donation is always defined as is either in cash or kind. So even this kind is allowed to, like, as a...
Well, it's a... I mean, Viren bhai, from a...
Yes. Certainly allowed. There is no... The only thing is you need to do a proper documentation, satisfy your auditors that the equipment which you have bought has been handed over to the institutions and get a receipt from them. That's it.
Okay, fine. Thank you.
But it would count as application of income in my opinion.
They would also term it as application of income given to other trust.
Okay, thank you.
Because you are getting receipt of the equipment from the trust. You have given not money, but you have given something in kind to the trust.
Yes. Go ahead, please. Somebody else had a question. It's not working. Okay, we'll take this gentleman's question. Identify yourself, sir.
My name is Jimmy Khan. I'm a chartered accountant. What I have not understood is about the corpus letter. What exactly is wrong with asking for corpus letter from a donor? My point is that if you don't have corpus letters, the trustees will transmit all the general donations, call it trust, call it corpus donations, and thereby not pay tax. So personally, I have no issue with asking for corpus donations.
No, but I don't think that is, I think you probably misunderstood.
No, somebody did mention that corpus donation has a problem, letter has a problem.
I'll tell you. The context was this, that when I go to public, it is a person's wish whether he wants to give donations towards corpus or he wants to give it just a voluntary contribution. I cannot force the person to make him sign a document stating that it is a corpus donation. You may request as a chartered accountant, you may even advise, yes. But there are people who will say, we are not bothered. This is what it is. I have given you 100 rupees, 1000 rupees, go away. Because in corpus donation, you have to identify yourself, please. You have to say who you are, you have to say what your address is, and you have to also, now what they are insisting is that identity of the person in case of bigger donations. So if I am getting 50,000 from somebody, now he will say कि अरे भाई 50,000 रुपया लेके जा मेरे पास से कैश, मेरे को ये जमेले में नहीं पड़ना है मेरे आइडेंटिटी देने में, तो that 50,000 I can always receive as anonymous donation. We are not talking about taxability of anonymous donation, but for religious trust, that anonymous donation is exempt because again Article 26 and 27, which says that there cannot be taxation on any amount which you have collected for maintenance of a religious place. So I am just mentioning this, but we cannot force or ask somebody that you please sign a corpus donation letter.
Couple of last questions.
Yeah. Good evening, I'm Amish here. I mean, my question is similar to what he asked, because we also work for relief for patients, and we generally donate to the, basically pay the donations for particular patients, but to the hospitals. So how does now that work? So
in your books of accounts, it will be shown as given to an institution,
That's
even though it's for an individual.
That's
Let's be real about it.
That's
We have a problem there, to put
Yeah.
it short. One last question. Okay. You want to ask one more question?
No, that's fine.
One last question we'll take. You can always interact with us offline in this. Yes, but we need to close the meeting.
Hello. Sir, I am CA Purushottam Kukreja. I just got 2-3 calls from many people that there are certain important...
Go on, we can hear you.
Certain important capital gain taxation provisions have come on the redevelopment of the societies where trust is occupying the premises. So I have not gone through the full act. I don't foresee any such sections.
We'll have to look at it. I don't think I have come across any
I
such.
have also not come across.
Yeah.
Thank you, sir. Thank you. I would request your association to allow all new members also to come take the membership of this trust.
We have a WhatsApp group on which you can join so that you can be aware of what we are doing.
Yeah, I am already there in the WhatsApp group.
Very
Thank you.
good.
Thank you,
sir.
But a humble request to all those who are joining, do not post good morning, good night, and those lovely messages which you send on special festive occasions. Avoid that. Thank you.
With such a response today, and everyone asking is the association getting formalized, I think me and my friends on the dais will think on it, and if something is needed, we'll go ahead and we'll inform you. But as of now, I thank everyone who came here, from the media, from the trust, from the NGOs. I thank you again for coming here and giving us support. I thank all the distinguished speakers, Mr. Andyarujina, Mr. Viren, Mr. Noshir. Thank you, and again thank you to everyone.